This is episode 174 of Talking Real, back in the studio, both video and audio, here with my good friend and co-host Nabil. Nabil, how are you today?
I am doing excellent. How are you?
I'm excellent. I have an article that I read, Nabil, and I want to get your take on it.
It's like the usually I do that to you.
Right. Usually you're putting me on the spot. But I'm curious what your thoughts are on this, because I have my thoughts on this. And this was an article I read in the Wall Street Journal. Not that I'm a regular Wall Street Journal reader. That would be nice. But no, this article deals with the company Blackstone Group Incorporated, which is a major investment company, right?
You know what I thought about when you said Blackstone?
The griddle?
The griddle.
I do have a Blackstone griddle, and I love it. Totally different company. This is the Blackstone that invests billions of dollars, maybe even trillions. I don't even know. They invest billions and billions of dollars for lots of people. But they're one of the most successful investment firms in the world. And again, billions of dollars that they manage on behalf of very high net worth people, or also institutions, right? We're talking like institutional investments for large pension funds, things like that. And this article talks about how Blackstone has agreed to buy a company called Home Partners of America Incorporated. Okay. And Home Partners of Incorporated America owns more than 17,000 houses throughout the United States. And what they do is they buy houses, they rent them out, and they do offer their tenants the chance to eventually buy, but primarily they are a buy and hold and rent the properties, right? Now, and they own 17,000 properties.
Is that home company buying and holding for themselves, or are they another investment group?
Yeah, so my understanding is they buy and sell on their own. Okay. This is what they do, is they make money off of this buying and selling.
Okay.
And Blackstone has agreed to buy this company for $6 billion. Ooh. Okay, like this is significant.
What's the average price of a home?
So actually, interestingly, it says that the median price for existing homes topped $350,000 for the first time in May. So home prices, as we know, have been through the roof. Mm-hmm. Okay, at a point when they are at as high as they've been, record housing prices, and an extraordinarily low inventory, right? We have Blackstone that's buying 17,000 houses by buying Home Partners of America for $6 billion. And again, Blackstone is well known as an investment company. And so this is not just some like fly-by-night kind of thing. This is a big deal. This is an interesting sign of where the housing market is. And it's certainly a forecast that Blackstone thinks that the housing market is going to continue to be hot. But I kind of am curious what your thoughts are on this, because I'm not giving you a lot of information there as to what I'm even referring to, but in terms of individual home ownership, rental markets, those kinds of things, do you think this is a good thing or a concerning thing?
I think, just like with anything, it's got its pros and cons. Right, the pro, what you mentioned, the fact that they're investing so much into the real estate market shows that there is a bright future and incredible potential in the market, right? But then if you think about a big company like that coming in and essentially swooping up all those houses, right? Those are probably never going to hit the market. They're always going to be rental properties. So like home ownership in that sense might decrease, because the previous company was, you said, sometimes letting people like kind of lease to own or whatever it is, but with a bigger investment group, I think they're just going to be looking at ROI and not necessarily anything else in terms of home ownership.
Yeah, I think you've like really keyed in on it, because I find this somewhat concerning, right? Because we've got a situation right now where there are people out there that are trying to buy houses and they can't, because there's a lack of inventory, multiple offers, people, and especially people who may not have a high amount of cash, first-time home buyers, people that may need to or want to take advantage of like an FHA loan or a VA loan. I mean, I think that's another aspect, that VA loans are not valuable to a seller at this point because of some of the extra requirements. And so this is really concerning to me, that we see this level of institutional ownership of homes, right? And that's what I'm very nervous about in terms of housing affordability, in terms of just people like you and I, if we wanted to invest in property or, retirement, for example,
Hmm.
it's harder now than it's ever been because these prices are going higher and higher and higher. And now you've got multi-billion-dollar companies that you're competing with, right? That are, and again, who knows how well they even take care of these properties, right? This isn't
Right.
like my retirement fund because I own a few properties.
Right.
They own 17,000 houses. So,
Right.
like, can we expect them to take really good care of these properties and take care of their tenants and be available when they need them? So, man, I don't know. I don't know what exactly this turns into, but man, it is certainly something that I think is interesting to see a company like Blackstone put out $16 billion at what would be the height of the market. Right now, maybe it keeps going up from here,
Right.
but we're certainly at a high at this point. And again, if you're trying to buy a house and they're out there trying to acquire more houses, that's who you're competing against,
Mhm. And they've got deeper pockets, like you were saying.
way deeper pockets, right? And so they can offer a house fully for cash. They
Yeah.
can do an escalation clause to infinity because they're planning on just buying and holding the property
They're,
forever.
they're just looking at ROI. So they're like, okay, numbers make sense until 100,000 over asking because we're looking years down the line,
Exactly.
as opposed to an individual who actually has a spending limit.
Right. And their ROI may be able to be a little bit lower because they have such scale, right? So their margins can be smaller
Mhm.
and still make a really big profit.
Yeah.
Right. And so I don't know. This is something that I think adds further concern to some of the issues that we see in terms of availability of housing, in terms of the cost of housing, because we're competing with large institutions, those kinds of things. But I thought it was just a really interesting article, an interesting thing that's going on there with Blackstone spending that kind of money on a company like that is, I think, very interesting. And I'm just wanting our realtor listeners out there to be kind of paying attention to this stuff that's going on, because it's something that merits watching to see how this will translate to changes in the market and kind of what impact this has.
Yeah. And I mean, like you already said, there was a company that already owned those houses. So this was happening anyway.
Yeah.
But it's the fact that it might be happening on a bigger scale and a faster scale, a larger scale, and that might affect it. I mean, while you were talking about, margins and being able to offer it for pay less ROI or whatever that is, it's just economies of scale, right? I was like, my econ background is coming in to help right now. Because with economies of scale, yeah, you can like edge the other people out with pricing or whatever it is that you want to do. But then to do that, you need to kind of, to a certain extent, dehumanize the transactional process.
Yeah.
To be like, well, it's just about numbers right now. Nothing else matters.
Absolutely. So we'll see. I don't know. It's certainly a different notion of investment. When you've got these large institutions, pension funds, multi-billion-dollar companies, it's just sort of an interesting thing that goes on, that's part of the competition. So wanted to just bring that up. We've got something else special. We've got a special guest that's going to be joining us here momentarily. Brad Reeser is going to come in to talk a little bit about something. So as he joins us, we're going to shift right over, bring Brad in, and talk to Brad for just 5 or 10 minutes here about something that we want to make sure you are aware of and up to speed on.